Hey everyone, thank you for clicking on the link to watch this free training. I'm Paul Johnson. I'm going to talk you through all the strategies and the ways that I and my clients have become multimillionaires over the last few years. Now, a quick story, very short story of mine. I became a multimillionaire. I basically lost nearly everything of my own home. And then starting from scratch, I became a multimillionaire again. So what I'm going to do today, I'm going to show you in this training how I did that, how I'm teaching my clients how to do that. And there's so many things to get through, so much to get through. And you're probably a business owner, a property developer, property investor, or an entrepreneur, or maybe like me, all of the above. So let's dive in straight into the free training. Let's not mess around here. Let me just click on this. And then here we go. 1 second. There we go. So here's the title of this today's training: Become a multimillionaire by unlocking the secrets to becoming a property development and business building pro. Pro being professional, obviously. So let's dive in. So a quick exec bio on me. I've had over 20 years in the M&A space, buying, building and selling companies. I've got over 20 years property experience, various different companies, various different strategies I've used over the years. I qualified back in the 90s, a long time ago, as a chartered accountant, chartered tax advisor and an accredited strategic planner. And I've now got a private equity fund, Global Private Equity. Now, I've coached, mentored and presented seminars to literally thousands of business owners, property investors, property developers, entrepreneurs all around the world. And so many times over the last sort of, God knows how many years now, 10, 15 years I've been doing seminars. It's the number of people who ask me, would I coach and mentor them and teach them the strategies I've used? And I always used to say no, because I had my own deals to do, I had my own opportunities. I was way too busy. So last year I launched a coaching business, Paul Johnson Coaching, and I'm now working with several clients. Some just buy the courses, some work with me on weekly coaching sessions, and on others I'm actually involved in doing joint ventures with, which we're going to come onto a little bit more down the line. Now, as it says there, I've made millions from the business and property strategies I'm about to teach you. Not just me, but I've got clients who are multimillionaires too. So let's dive into what we're going to be talking about. So as I mentioned earlier, I became a multimillionaire using several different property and business strategies. Then I lost everything through some my own fault, my own mistakes. I won't lie on that. At the end, yeah, I did. I've made mistakes along the way, which I avoid my clients making now. And then I became a multimillionaire again, starting from scratch, using these strategies. So the kind of strategies and deals that I've been involved in over the years: buy, build and sell is one of my favorites, using LBOs, leverage buyouts. And we're going to cover all that in the training today. Everything from startups and scale-ups all the way through to IPOs I've been involved in, all different deals, literally dozens and dozens of deals over the years. I've owned property companies in various different manners, different industries. I've used several different property strategies over the years. My favorite being simultaneous transactions, which again we'll come onto in a lot more detail later on. Joint ventures, I absolutely love joint ventures. I think they are an absolute godsend. It's effectively a free way to take two businesses, double the profits, double the turnover, double the profits in a free way. Okay, so we're going to come on to that a lot more. And artificial intelligence, we can't ignore it. It's something I've been involved in the last sort of 12, 18 months. We've been looking into artificial intelligence, using it in various different ways, and it's phenomenal. And it's changing the world in a massive way. So we can't avoid that. So effectively, what I'm talking about here is the strategies, the guidance, and obviously the diversification. That was one of the major things that ruined me many years ago. I had all my eggs in one basket. It was all about property. I had a property company in the UK, a property company in Spain, which was covering over 10 different countries. I had a portfolio of buy-to-let properties. But when the property market crashed in 2008, I lost virtually everything. So diversification is so important when you're starting out and you're starting to build this. Always have that at the back of your mind. Don't want to have all your eggs in one basket like I did many years ago. So why should you do this? Let's think about this for a moment. What does a multimillionaire status give you? Well, the best way I think of this, the best way to describe this is personal freedom and financial freedom. And a great sort of definition of effectively of those two types of freedom is doing whatever you want with whoever you want, whenever you want. And of course, the ability to buy whatever you want. Now, personal and financial freedom are different for everyone. So just take a moment now. What would it mean to your life if over the next, 6 months, possible, 12 months, 18 months, however long it would take to reach that stage? Of course, that's going to be gradual. Your life is going to improve month by month as you're focusing on these strategies, you're implementing them. What would it mean to your life to effectively become a multimillionaire? So this is just a short video now before I go on. It's great for me to tell you all about myself and how how amazing I am and everything I've achieved. But it's just a very, very short video. I'm going to play for you now, just of a few clients that tell you a little bit about me. There's the click on the play. So yeah, just similar sort of thing to Ed. How have you found the coaching so far?
A Zoom call with Paul straight away. Yeah, you do your due diligence on certain people that you do business with. So I did my due diligence on you, and everything ticked the boxes of what we were looking for. And as soon as we jumped on a Zoom call with you and realised that you need to get a coach that's not just been around for a couple of months or a couple of years, but someone that's been in the industry for decades. And it's what me and my business partner have got with the people that we work with. They're very established and experienced specialist professionals that we get advice from. There are businesses that myself and Kat have looked at, and without your support, we could have been going into this completely like in a huge car crash. And it's been great to have your support and you being on those Zoom calls and offering that wealth of knowledge in all aspects of having those discussions with those business owners.
Quite demanding and intense, so apologies, Paul.
You certainly can.
My brain goes at 1,000 miles per hour. I've got so many questions all the time, and it's really comforting to have Paul there to go, oh, I thought about something, what about this? And I'm always trying to be creative with how we structure deals, and Paul's very good at validating and looking at whether we thought everything through properly and the pros and cons of every approach. So it's really invaluable, and just basically supporting what Ed said. We needed someone to help us that's got that experience, and I've got some business experience. But I don't have the same level as you do, Paul, from an mergers and acquisitions perspective. And we have got quite an ambitious plan. We add value to land through the planning process, and we're looking to acquire architecture firms because it's sort of similar business to what we do already, and it will help with our deal flow. So that will accelerate our growth. And that's what we came to Paul with. We asked Paul to sort of help us with that, our plan. And it's all going really.
You've always been amazing that, because I'm quite new to the property, and Paul's always answered my calls straight away, knowing that I know he's very busy. Even he will always pull over, or even if he's driving somewhere, say, like, give me 5 minutes, take that time to have, and he won't just message or ring up and take that time just to discuss things with me. So he has actually saved me a lot of money, because I always obviously knew deals, he always get excited. He's always then grounded me and just sort of said, let's look at these. And he's come and done site visits with me, with his partners, and gone the extra mile with me and explained why we're not going to proceed with it, why it's not a good idea, or so he sort of talked me through why it's not good and things like that. So yeah.
Yeah, that's good.
I just said that you are genuinely a really good guy, and that you are what you say you do is what you do. It was just just to back up the character. Obviously, we've not done any business together. We know each other through business and through other entrepreneurs, but genuinely really lovely guy. Does what he says.
Yeah, no, very good, Paul. Obviously, we were working on a list. We created a list of prospects together. Sort of went through that, creating a strategy to approach these businesses. And it's obviously I've known you for a few years and stuff. And it's I was looking at getting a coach anyway. And then, like you say, just that video of yours in the car is going to prove to be a winner, I think, over a period of time, because that was the thing that made me take action. I think. Yeah, I reached out to you straight away and just said, this is what I'm looking to do. What can we do? Let's do something. Let's crack on and get these list of companies together and start contacting them and start working on some deals.
So yeah, just simple. Okay, so there's a few people there. As I say, I can sit here all day and tell you how amazing I am and everything I've done, but it's nice to hear from a few other people. We've got a load more testimonials. That's just a selection of them there, and several more that are being prepared right now with current clients. So they'll be uploaded soon. So the first thing I want to talk about before we dive into the actual courses and the actual strategies is having the right mindset. Now, it's something I've always try to ensure my mindset is strong and I'm focused correctly and that my objectives are in place, etc. Now, having the right mindset, without it, you won't get started. So, you know, it's talk about that first step, excuse me, is the most important. But without the right mindset, you're never even going to get started. You might have some great ideas and you might think about things that you're going to do, but you just won't even get started. Dealing with problems and adversity, which I've had to deal with many times over the years, it hasn't been all plain sailing by any stretch of the imagination. So having the right mindset to deal with the problems and you know, and approach them in the right way, stepping out of your comfort zone. This is a major one for so many people where, you know, they've done okay and they've had businesses or they've done a few property deals or whatever, but they're not really hitting that multimillionaire status. So you have to step out your comfort zone to get there. You know, you can't carry on doing everything you've done day by day for the last so many years and expect it just to happen. You know, step out of that comfort zone. Avoid imposter syndrome. This is something that I think so many of us suffer with. You know, you're going into a meeting with a business owner looking at a £10 million deal, and you know, just maybe thinking you don't deserve to be there. You know, and that all comes down to mindset. It comes down to sort of self-image psychology, as Maxwell Maltz talks about. And you know, you've got to avoid that. You've got to know that you're in the right room and you're there for a reason. Focus every day. This isn't, you know, mindset isn't something that, okay, every Tuesday morning at 10 a.m. I'm going to work on my mindset. It's okay. It's got to be something that's consistent every day. You're keeping your mindset there. And something Tony Robbins talks about. I've been on Tony Robbins courses many years ago. The peak performance state. There's a statistic there that it's only really possible to be in that peak performance state for 2 or 3 hours a day, which is something incredibly important when you're thinking about scheduling your day, scheduling your work. You know, we can be in a good state, you know, a high state for the next sort of 5 or 6 hours, but effectively to be in that peak performance state is like 2 or 3 hours. You know, you think of sort of top level athletes, footballers. I'm a huge football fan. Think of the footballers and really, you know, their peak performance state, it's for a couple of hours. You know, they're not in that state. You know, when you see them on the pitch and they're playing for 90 minutes, you know, it's a couple of hours worth of that peak performance state, really 2 or 3 hours. But they can't maintain that. So you got to balance yourself there. And if you're not feeling great as part of the day, that's fine. You know, but just keep pushing forward. So the keys here, I think, are putting yourself in the right state every day, and putting yourself in the right state before every meeting, every interaction is so important. You know, you don't want to walk into a meeting having not worked on your mindset. But the other key point here, there's a lot of people sort of miss with this, is ways to put your client, customer, supplier, investor in the right state. You know, it's all well and good you've been in the best mindset you could possibly be in, and you know, projecting that to your client, but you know, you've also got to work on your client, putting them in the right mindset as well to, you know, to get the full advantage of this. So the suite of 7 courses that I've created that effectively cover over 20 years of my experience, and all the strategies I've used to make the millions I've made over the years, are number 1, buy, build, and sell a company. So this is effectively how to buy, build, and sell a company without using your own money. Excuse me. The second course is about property strategies. There's actually 15 strategies in there. You don't have to use them all, of course. The next course is simultaneous transactions. Now, this is effectively my favorite property strategy, and we'll go into some detail on that later. Joint ventures for business owners. As I said before, I love joint ventures. I think they're amazing. I'm involved in quite a few at the moment. And you know, we'll talk about how business owners can use joint ventures to propel their business forward. Joint ventures in property, just as important. And again, I've used several JVs over the years, and I'm involved in a few right now on property deals. AI for business owners. As I said, you can't ignore AI. It's not going anywhere. It's just going to get bigger and bigger. It's transforming the business world in a major way. And if you're not learning these strategies, you're not learning about these types of software and apps, etc., then you're going to get left behind. Similarly, for property, AI can be used for property investing, property developing, etc. So that's the suite of 7 courses, and we're going to run through this in the training now. And then at any time during this training, if you think, right, I've seen enough of this guy's face now, I've heard enough of his voice, the next step is to click on a link, which is just below this video, and book a free strategy call with me. And that's completely no obligation, completely free, and it'll just be you and I talking about you and your circumstances and how you can apply these strategies and the best way to do that. So if at any time in this course, you know, you might watch one of the sections, or you can jump forward to one of the sections that piques your interest. And at any time, just, you know, you haven't got to watch the full training, click on the link and book a call with me. So we're going to start with course 1. This is something I've been doing for many, many years, over 20 years now, how to buy, build and sell a company without using your own money. So initially, I've used the number 1 million just for simplistic purposes. Obviously, you know, every company you buy isn't going to be £1 million. It's, you know, I look at things from sort of £500,000 up, and my sweet spot, excuse me, sort of from sort of £500,000 to say 10, 15 million. That's where I sort of operate in that sweet spot there. So buying a company in 6 steps. First thing I'm going to do is source the deals, and there's loads of ways of sourcing deals we'll come on to in a moment. Conducting due diligence, very, very important. You know, you can fall in love with a deal and believe everything you've been told. It's not always the case. You know, I'm not saying all everyone who sells a company is a liar. That's not true, of course, but you've got to do your due diligence to make sure what you're being told is exactly exactly what you're going to end up buying. Raising capital, of course, so important. You know, once you've found the deal and you've done the due diligence and you know it's right for you and right for your strategy, you've got to then raise the capital, teach you about that. Negotiating, so important to negotiate the right deal, not just the price, but also the structure. Closing the deal, you know, a deal isn't a deal until it's been closed, and obviously, you know, the contracts have been signed and exchanged and completed, and then the contracts and the legals. It's very, very important. So this is the buy, build, sell. So sourcing deals. So there's so many ways, as it says there, deals are everywhere. They really are. And there's various ways you can find these deals. You know, people come to me and say, I don't know how to find a deal. Well, they're everywhere. You know, you have deal brokers, you have online brokers, you have direct to vendor. So we have what we call DTV letters. So let's say, you know, you want to buy, I'm very sort of property based as I've been over the years. You want to buy a construction company in a certain area. Let's say you're in London, you want to buy a construction company in London. Well, it's quite easy to find a list of construction companies that meet your criteria and send them a letter, you know, or I can do that. I do that for my clients. I can do that too, you know, where I send a list. I have a client interested in buying a company similar to yours in this area, and direct to vendor letter. So obviously with there, you're getting companies that probably aren't even for sale at the moment, but you could pique the interest of the owner by sending that letter. Your own network, you know, never ignore your own network. You know, who do you know that might know somebody who's selling a company? I've had this several times over the years where I've just been talking to someone and we talk about what I'm doing and what I'm looking for. They say, oh, I know somebody. Many years ago, there was a guy I was chatting to, just having a coffee with. He said, oh, my next door neighbour's selling that kind of company. And next thing you know, the deal's been processed. Introducers, you know, if you can build a network of introducers of people who are out there who can actively look for deals for you, brilliant. Social media, of course, a great way to sort of, you know, tell people what you're looking for and attract leads, generate leads. Next, due diligence. Of course, you've got to look at all the different areas on the due diligence. There's a little bit, it's probably a little bit sexist, this, but it's a term that we use in M&A, with makeup, without makeup. So we can all understand what that means. And so you're given, when you're looking at a potential acquisition, you're given the with makeup situation, what that company looks like in their eyes, or how they're trying to promote that company, how they're trying to sell that company to you. You've got to find the without makeup side of things. And that's where due diligence comes in to get the true picture. So you've got to be looking at the balance sheet, analysing all the different elements within the balance sheet, the fixed assets, the current liabilities, etc., and deep dive into each area. The profit and loss account. You know, is this true? You know, let's do a little bit of auditing on this. Let's do some due diligence on the P&L account. The work in progress, major part. I've seen several deals over the years where the work in progress has been exaggerated to a certain extent. Now, a pound of work in progress is a pound of profit. And if you're looking at a company and they've valued this based on a profit multiplier, so let's say it's making £1 million a year, so it's worth £3 million because they've used a profit multiple of 3. If that work in progress is £300,000 in there, but in reality it was only really 150, you're paying over the odds for that. Legal due diligence, of course, you've got to check all the areas that are there within the legal side of things of the business. Look at all the assets, as we mentioned on the balance sheet there. Just make sure that, you know, they are worth what they say they're worth. The balance sheet value is not always the true value. it's hardly ever the true value if I'm being perfectly honest on that. You know, we're using depreciation and net book values, etc. It's very rarely the true valuation. Have the assets valued separately and independently. And of course, taxation. You don't want to be buying a company and then find out that, you know, it's got a £500,000 tax bill you knew nothing about. Next step is raising capital. And now, again, this is a major thing that clients ask me, where on earth do I raise the capital from? Well, there's various ways. There's various ways of raising capital. There's banks and financial institutions, of course. There's private investors. Friends and family can often be, you know, a help just to get the deposit together, maybe. Asset-based lending, huge one. You know, there's often, you'll buy a company that's got quite a lot of fixed assets. Could be property, could be plant and equipment, it could be motor vehicles, etc., where they're unencumbered or that they've got debt against them, but you could actually, you know, the LTV isn't being maximised on that, so you can use asset-based lending to raise some funds. And obviously invoice finance. You know, the invoice finance is a very quick way if a company's got a debtor book, so they're owed a lot of money from their customers, and they don't have an invoice finance facility, but quite a quick way of raising funds there. So negotiating, so important to sort of, you know, hone your negotiating skills and always be thinking now you're always negotiating. There isn't a stage in this process where right now I'm onto the negotiation process. You can't, from the start to the finish, you are negotiating, okay? As in life, you know, as in all kind of business deals, property deals, whatever it may be, you're always negotiating. So always have that in the back of your mind. Now, the key thing I always say is you're trying to negotiate, or your objective is to negotiate the right deal for you, not the seller. Okay, so the seller wants the full price, he wants it all up front, he wants you to accept his valuations, blah blah blah. But you want the right deal for you, and always be prepared to walk away. You know, if you're trying to negotiate the right deal for you and it's just not working, walk away. As we said earlier, deals are everywhere. Don't fall in love with the deal and think, oh, I'm going to have to take these terms of this deal, take this deal structure, because that's what the seller wants. Walk away from it if it's not right for you. Make sure you're getting the right deal for you, because, you know, this deal, you could own this company for 3 years, 5 years, that kind of thing. So, you know, you got to make sure it's the right one. Always be looking at multiple potential deals. So when you're negotiating, and if you just find one deal and fall in love with it and you chase it and you're not getting the right deal, you know, if it's the only deal on the table and it's the one you're falling in love with, you're more likely to accept a bad deal. Whereas if you've got multiple potential deals on the table, you could just say, well, okay, I can't structure the deal, I can't negotiate the deal that I want on this particular transaction. I'll just drop it and go on to another deal. The actual deal structure is what we're talking about there, you know, is how you're going to buy this company. There's various different elements within that. Are you going to buy all the company? Are you going to get do you want the owner to stay on? Do you want the owner to still own some equity? It's very important often to keep the owner interested, and, you know, to the outside world is still involved. The payment plan and the strategy, you know, you negotiate the best deal for you. How do you want to pay for this? Do you want, you know, you very rarely want to pay it all up front on day one. So, you know, negotiate a payment plan, a strategy there. And remember, it's a buyer's market, that you are the prize. You know, there's thousands of companies for sale right now. And you're the one that's putting your head above the parapet and saying, I want to buy this company, or potentially I want to buy this company. So remember, you're the prize. Closing the deal, as I said before, a deal's not a deal until it's been closed. Again, just reiterate there, remember, you are the prize here. So things can change, you know, as it says there, final price reductions, that kind of thing. Things can change. So keep your mindset strong. You know, just because you're about to sign the contract, you're about to exchange and complete on the contracts, it's not quite finished. So keep your mindset very strong. There could be some final price reductions that you can negotiate here. They may try and increase the price at the very last, at the 11th hour. But, you know, obviously, remember, you're the prize. Keep your mindset strong. And then you'll move on to heads of terms. Once you've moved to the heads of terms, you'll move forward to the legals, all the different legal documents. So the contracts and legals is various different contracts and legals. Obviously, you've got to get yourself a good solicitor. You can, you know, I can introduce you to mine if that's something you're interested in. But you're going to need things like the exclusivity agreement when you're looking at buying the company. You know, you don't want to be doing all the due diligence and negotiating and raising the funds and then find out that at the 11th hour that someone else has picked you to the post and bought the company. So get yourself an exclusivity agreement in place. Non-disclosure agreements are so important. In this, there'll always be NDAs to sign all the way through the process. Non-compete agreement. Now, this is incredibly important. What you don't want to be doing, obviously, is buying a company of someone who then goes and sets up a month later in the same area, in the same industry, and takes all the customers back. So you've got to have a non-compete agreement in there. The sale and purchase agreement, this is a huge document. And it's so important. And again, where you need a very good solicitor to make sure that what's going in the sale and purchase agreement covers your back. And obviously, bank mandate, so important. Right at the time when you complete and it's now your company, change the bank mandate immediately. I've seen this mistake time and time again where people have forgotten to do this, and effectively the person who just bought the company off has still got access to the bank account and can still transfer money. So get that sorted immediately. So once you bought the company, you've got to build it. Yeah, there's no point in buying a company. As I said, for simplicity, I've used £1 million. There's no point in buying a company for £1 million, running it for 3 years and signing it for £1 million. You want to build it. You want to build it up as far as possible. So how do you increase your business value? Again, I've used £1 million for simplicity. How do you increase the business value by £1 million? There's various ways. Strategic planning, so important. We'll come on to that in a moment. As I say, I qualified many years ago as an accredited strategic planner, and I've used that for 25 years now. I've been using strategic planning techniques in all my businesses, working with my clients. It's so important. Cross-fertilization. That's another fancy name for joint ventures, which again, as I told you before, I really do love joint ventures. So cross-fertilization of databases, which we'll come on to. Analysis of your balance sheet and where are your assets, very important. Cash flow. I can't express enough how important cash flow is in businesses. And then raising finance and investment methods to enable growth. Just because you've raised the funds to buy the company initially doesn't mean you have to stop raising finance. Let's start on strategic planning then. I'm going to work through this fairly quickly. This is sort of a very simple explanation of what's in a strategic plan. Start with your personal objectives. What is it you want from this business? Then move on to business objectives. What do you want from the business? What does the business need to do to grow and to develop? And from that, you'll have strategic objectives, which is effectively the objectives you're going to follow to grow this business. And then you start by looking at the products and services. Now, this is existing and potential. Look at all your existing products and services, see which ones are performing, which ones are in growth markets, etc. And then look at potential products and services. What markets could you move into? Excuse me, I've got a bit of a cough. Then look at JVs, cross-fertilization, and say cross-fertilization, effectively a fancy name for joint ventures. Then look at the organization chart of the business. Where are the gaps? Where do you need help? Where do you need to recruit? Where maybe have you got too many employees in a certain area? That can happen. Then roles and responsibilities of each person within the organization. Make sure everyone knows their roles and responsibilities. Make sure that's in line with your organization chart, and all your objectives are going to be met by the people you've got because they're covering certain roles and responsibilities. Then look at management information systems. What information do you need at the touch of a button to take your business forward? Very important. That can be all different types of software. It can be different types of auditing systems, whatever it may be. We term that the management information systems. Then look at your marketing strategy. Now, I hear it a lot in business, sales and marketing strategy. Well, I don't agree with that, because sales and marketing aren't the same thing. Marketing is marketing, sales is sales. So you have to have a marketing strategy and a sales strategy. And again, analyze these constantly. What's working, what's not? What new strategies can you bring in? AI is huge, for new marketing strategies and also new sales strategies. Always be analyzed and seeing, what's performing, what's not performing, new areas, etc. And locations and geographical growth. Okay, so where's the company based now? Where do you want to grow this? I'm obviously based in the UK, so I look at, is this going to be just a local company? Is it going to be a UK wide, or is it going to be worldwide? So always looking at that. And then you're moving on then to financial forecasts. You create a strategic plan from this, and from that you have strategic action points, which is the points you need to be doing. And obviously on that you go, okay, who's going to do this? When's it going to be done by? And constantly review that every month, every quarter, every year, reviewing your strategic plan, your forecasts, and your strategic action points. So again, joint ventures, cross-fertilization, fancy name. Let's explain this in a really simple way. You have a product or a service, okay, in your company. You also have a database of customers, existing and potential. You got your marketing there, you got your leads, you got your potential customers coming through. Now, there are loads of companies that got the same. Yeah, they've got a product or a service. They've got a database of customers. So if you can find one with a complementary product or service to yours, negotiate a JV, connect, you effectively, you're marketing their products or service for them. They're marketing your products or service for you. Negotiate a JV, and that's the key there. That, you know, it's a very, very famous saying of the art of good business is being a good middleman. You know, I've done that a few times, and it's very, very true. But the key there is the word good. The art of good business isn't being a middleman, it's being a good middleman. So if you don't get your JV agreement in place, and I've seen these fall apart in the past as well, where it all seems great and it's all done on a handshake, but what you often find is it falls apart. There's a famous saying that, that I've used many, many times, is a one-way street is always very short. So if you've got a JV and one side is making a fortune from that JV and the other side is making peanuts, it's not going to work. It's not going to continue. It's got no longevity. So you've got to negotiate the JV in the right way. And I find the best way is to pay a profit share or a commission on every sale generated. That keeps it. It's no good sort of saying, you know, it's we're going to pay each other so much every month, because one company can be making, you know, £1 million a year from the JV, the other company's making 50 grand, you know. So I think it should be on a percentage of what's generated. Okay, asset analysis. Again, we're talking here on how to sort of strategically grow your business. Have a look at the assets within the business. So analyze your balance sheet. Where's your company net worth? You know, where is the value? And this is say, being a chartered accountant for many years. This is so important when I go into clients. I always analyze the balance sheet when I look at companies I'm going to do a deal with myself. So the fixed assets, you know, have you got too many fixed assets? Are you utilizing those fixed assets? I've seen so many companies over the years where they've got a huge amount of plant and machinery and equipment that they very rarely use. So one opportunity there, of course, using an example that I've used in the past, is you can sell those assets, pull some cash into the business that you can use to grow, and rent those pieces of plant and equipment when you need them, rather than owning them, and they're sitting dormant most of the time. Cash, are you holding too much cash? You know, I know we say cash is king, but there's a balance there to be had. You know, you don't want millions of pounds of cash when that cash could be used in other areas to grow your business. Debtors, you know, are your debtors high? Are your debtor days too long? You know, there's various ways you can bring that forward. Excuse me, you can reduce your debtor days. There's various incentives you can offer to customers to get them to pay quicker. Stock, a client always comes to mind when I think about the stock many years ago, and they had far too much stock. They had a warehouse full of the materials that they were selling, and we went in, we analysed this, and the first thing we did was like, you need to do a stock take. They weren't even doing stock takes. They were kind of scared of going into this warehouse that was full of spiders and cobwebs and everything else. And once they did the analysis of the stock, they realised that they were effectively buying equipment or buying ingredients that they were selling as the orders were coming in, when they already had the stock in the warehouse. So again, they reduced that right down. That obviously moves itself, the balance. If you're moving an asset from one place to another in the balance sheet, then you know you're moving things around. It's a transfer of value. So in this instance, they were selling the stock, which was putting more money in the bank account. And work in progress, you know, are you maximizing your work in progress? Are you getting paid on time? Have you got too much work in progress? You know, maybe you could start invoicing in stage payments to reduce that work in progress. So that's you know, a very important part of building a company, making sure that your assets are in line and you're maximizing each area. Cash flow, as we said before, you know, it's so important. The old saying, turnover for vanity, profit for sanity, but cash is king, is so true. Now, this is a very true fact. Most businesses fail through lack of cash, not through lack of turnover, not through lack of profitability, not because the product isn't good enough, not because the sales and marketing system isn't good enough. It's through lack of cash. That's how a business fails. So it's so important to have cash flow forecasts monthly, quarterly, and annually, and know when you're going to need more cash. You know, are you going to? It's all well and good taking on a £2 million contract, £5 million contract. If you're good, let's say, again, use the property industry, use a construction company as an example. If you take on a £5 million contract, you're going to have to buy all the materials for that job. You're going to have to pay the wages, the subcontractors, on top of all your existing overheads. So if that's going to mean that, you know, they're taking on all this work, and you're not going to get paid on the work for maybe 30 days net if you're lucky, 60 days net, 90 days net sometimes, you're going to wait to be paid by that customer. But again, you've got to pay out all this money in the first place. So I see companies sometimes celebrating because they've negotiated, let's say, a £5 million contract. And you look at it and think, that's going to kill your company. That's going to absolutely, that's the rapid growth kills companies sometimes. And if you don't do the cash flow forecast correctly and make sure that you can afford to take on that contract, again, you can be celebrating a £5 million contract and 6 months down the line, the company's gone because it's run out of cash. So raising finance, as we mentioned earlier, when you're raising finance to buy a company, yeah, that's really important. But you don't have to then ignore the fact that you don't need to raise any more finance. You may need to raise some to grow the business. So again, we're coming back to the same old, same sort of 5 areas here: banks and financial institutions, private investors, friends and family, asset-based lending, invoice finance. Have a look at, is there ways you can raise more finance will enable you to grow the company quicker. Okay, so once you've bought the company and you've built it up, again, we're just using £1 million for simplicity there. You bought a company, you built it up, and now you want to sell it. Now, you can often make the profit on the sale as well as the purchase, as well as in the build. So these are 3 distinct processes here: the buy, build, and sell. Yeah, you'll see on social media, on the internet, a lot of people sort of teaching how to buy a company without using your own money. But for me, that's a third of the process. If you just teach someone how to buy a company, you're throwing them in the lion's den. You really are. So I teach my clients how to buy the company, build the company up, and then how to sell it for maximum profit as well. So selling a company in 6 easy steps here: maximize the value, prepare the company for sale, find a buyer, negotiate the deal, close the deal, onto contracts and legals. So it's a bit like, well, it's very, very much like when you're buying a company, now you're on the other side of the boardroom table. So again, as I mentioned before, this is a buy, build, and sell strategy. It's not just a how to buy a company. It's the full 3 steps. So the exit dates, timing is so crucial here. If you exit too soon, you're leaving money or value on the table. If you exit too late, you're at risk of major events, crashes, loss of major customers, etc. Got to think about your own age and your personal objectives. When do you want to get out of this business? When do you want to move on? Your other opportunities. You might think, okay, if I sell now, I might not get as much money as I could do in a year or two's time. But if you've got another opportunity on the table, which is going to make a lot more money and far more enjoyable, it might be the right time to sell. And then, of course, do you sell 100% now, or do you only sell a percentage of the equity? That's something to consider. So maximizing the value, as we mentioned earlier. Again, strategic planning. Let's go back through your strategic plan. Make sure you've exhausted all the ideas, everything that you could do within that strategic plan that you created. Make sure you've done everything. How you're maximizing the value? Are there other things you could be doing to increase the value of the company? And just go back a stage there. It says in brackets there, profit multiples. Just for those who've sort of not bought and sold companies before, what you generally find in M&A, mergers, acquisitions, is that the asking price will be a multiple of the profit. So if a company's making £500,000 profit a year, and the multiple that is effectively used in that industry is 3, it's going to be worth 1.5 million. Now, that's not always exact, and there's various ways you can increase that multiple. But effectively, that's, again, for simplicity purposes, that's why we're talking about profit multiples here. Cross-fertilization is the other joint ventures you could be entered into. Is there other ways you could grow your business with different sort of JV partners? Analysis of your balance sheet, where are your assets, as we mentioned earlier. Again, go over this, make sure that this is maximized. Cash flow, have you got this absolutely bob on? And is there an ability at this stage to raise more finance or some more investment to enable a little bit more growth before you sell? Now, preparing your company for sale, this is so important, because you're effectively handing over this company to the new buyer, and you want that transaction and that's the handover to be as seamless as possible. Now, another key point here is staff and HR contracts, etc. So what the buyer doesn't want is to buy your company and then the 3-4 key staff leave within a couple of months. That can destroy the business. So make sure you've got your contracts in place. Make sure all your HR documentation is in place. And similarly with key customer contracts, the number of times I've come along and looked at companies, and they've got a great turnover, and they've had these customers for years, but there's no contracts in place. And now, someone's, but they've been around for years. We've got the goodwill of the customer. What you don't know there is, Are those customers doing business with that company on a regular basis and been doing that for many, many years because of the company, because of what the company offers, or because of the owner? It could be a personal relationship. It quite often is in small businesses. So you don't want to be buying a company and then those customers leave because the guy that you just bought off, or the lady you just bought off, is no longer there. Work in progress maximization. How do you maximize this? As we said earlier, that a pound of work in progress is a pound of profit. And when you're buying a company, it's a key area of due diligence to make sure they've not overstated this work in progress. But obviously, when you're selling your company, you want to be making sure you've maximized it. And then have a data room. You make it easy for the potential buyers to find all the information they need by pulling it all together and putting it into a data room. Obviously, once the NDA has been signed, you can send them a link for that. Okay, where do you find the buyer? Similar sort of people talking about, as we were talking about, sorry, earlier, that you know, how to find deals, how to find buyers. That this is you know, again, you know, on the other side of the boardroom table here. So it could be an MBO, a management buyout. You know, often you see this in business where you've got key members of staff, key management team who've always had their eye on owning a company like this. So you may be able to negotiate an MBO with your current staff. You may be looking at a single buyer. There may be another company in industry, maybe obviously sometimes slightly larger than you, that wants to sort of absorb you and bring you into their fold. You could sell to a private equity firm. Yeah, the private equity firms are always looking for new companies to buy, new investments. You could do an IPO, an initial public offering. Now, a lot of people think, well, how can you can't do an IPO on a small company? Well, you can. You couldn't do it on the London Stock Exchange or the NYSE, but there are thousands of stock markets around the world, and a lot of these, the smaller ones, for instance, Stockholm, they take on smaller deals. So I'd say, you know, it's potentially an exit strategy to actually do an IPO. LBO, leverage buyout, as a sales strategy. Now, you know, you probably, well, might quite possibly bought this company using a leverage buyout. Now, it's, you know, it can sometimes have a little bit of a tarnished image within the industry. But if you can sort of make it sort of obvious that, you know, you are willing to accept an LBO. If somebody wants to buy your company, and the end result is that you run off into the sunset with your 2 million, 5 million pound that you just sold for, does it really matter that they've done a leveraged buyout and borrowed the money on the assets of the company? Not really. No, I don't think so. I don't think, you know, that's their issue. You know, they've given you the money you wanted. You ran off into the sunset. It's now their company. If they want to leverage that to pay for the acquisition, that's their decision. So be it. You could do a roll up. You could be looking at sort of, you know, joining with other groups, other companies to create a group and sell the companies after a roll up, or you could be merging before the sale. You know, you could be effectively merging with somebody else rather than just straightforward sale. So you're again looking at you look at the brokers here. There's several brokers that help you sell. Look at your own marketing and your own social media, or again, direct to seller. We talked about direct to vendor earlier, where you write into companies that you might want to buy that maybe aren't on the market right now. It's the same concept with when you're selling the business. Again, going back to negotiating, we mentioned before that you're always negotiating from the start to the finish of this process. It's the same in selling. The right deal for you, not the buyer. As we said earlier, that you know, we mentioned this. You know, multiple potential deals. Look, this is again what I'm saying here is looking at multiple potential people to sell this to. So, you know, you're not thinking, oh, I don't really want to take this deal with this guy who wants to buy, this guy or lady that wants to buy my company. But it's the only deal on the table. He's the only horse in town. That's not where you want to be. You want to be in a situation where if someone's offering you a deal and you don't really want to take it, you can walk away because you've got other potential buyers on the table. The deal structure, again, you know, make sure you're negotiating the right deal structure for you, the right payment plan, the right strategy there. And this time we've flipped the script here, that now your company is special. You are the prize again. You know, in this, it comes down to mindset. You're the prize. Your company is special. You know, this isn't just another. They may think they're the prize because they're the buyer, which we taught earlier. But in this scenario, when you're selling your company, in your mind, you're the prize. Okay. So closing the deal, remember you're the prize. I reiterate that constantly. Keep your mindset strong. You know, this is something where you've got to stay focused and keep your objectives in mind. There could be final price and structure amendments. Move on to heads of terms and move forward to the legals. Okay, again, the contracts and legals, we covered this when we were talking about the buy section of the buy, build and sell. Non-disclosure agreements, NDAs, non-competes, exclusivity agreements, sale and purchase, bank mandate. We've covered all this. So that's effectively the buy, build and sell course, the buy, build and sell part of this training. Now, as it says there, learning just this one strategy could easily make you a multimillionaire. And there's still another 6 courses to talk about yet in this training. But if this is definitely the one for you, click on the link below and book a free strategy call with me now. And we can deep dive into how you can utilize this buy, build and strategy. You know, what is it you're looking to do? What kind of company do you want to buy, etc. So if this, as I mentioned earlier, if at any point in this, you've had enough of me, you've had enough of my ugly mush, and you've heard enough of my voice, and you want to take this forward, click on the link and book a strategy call. Okay, we're now looking at course number 2, 15 profitable property strategies. Which we'll run through these quite quickly. I'm sure you've seen all of them or most of them before. Being a property finder or a sourcer, you need to identify lucrative deals, introduce them to property developers, spot below market value opportunities, of course, negotiate favorable terms, build a network of buyers. Now, you know, if you can build yourself a network of property developers, so valuable. Create a regular stream of deals that you can offer to these people. And this is effectively like a low risk, high reward strategy. So you've got deals, you've got buyers, and you're acting as the middleman. Number 2, introducing deals to funders. You know, you need to source the deals, introduce it to the funder, and earn commissions. Again, have a network of developers and a network of buyers, and you're the middleman again. You're dealing with brokers and financial institutions and maybe even private investors. So it's deals, funders, commissions, quite self-explanatory. Next strategy is simultaneous transactions, one of my favorites, and I've actually created a whole course on this, so we'll talk about that in more detail. Identifying acquisitions, enhancing the value, etc. As I said, we'll go into this in more detail later. It's effectively an acquisition of a property, enhancement of the value, and you're selling it without even buying it. Effectively a simultaneous transaction on the same day. So effectively, you're not buying the property and then waiting a few months and selling it again. The sale and purchase are pretty much going through what they're going through on the same day. Next one, buy-to-let investments. I'm sure you're all aware of buy-to-lets. It's a classic property strategy. Acquire properties, rent them out, gives you a cash flow, and it gives you asset appreciation. Next strategy, house flipping. Again, I'm sure you all know what that is. It's not something that needs to go into any real detail, but it is a strategy that you should consider if this is what you're looking for the quick wins. You know, you could have your own team, or you could subcontract the work. You know, you're effectively acquiring properties, renovating them, selling them for a profit. You might be looking for dilapidated properties, or it might just be a quick facelift, acquiring, renovating and selling. Next one, property development. I'm talking here about ground up property development. So you're sourcing the land, you're obtaining the funding, you build, you can hold or sell it. This could be residential or commercial. You know, obviously, again, you're creating rental income and capital appreciation. So you're looking for the land, you're obtaining the funding, and you're building. Next one, HMOs. Again, you probably all know what HMOs are. Single property with multiple tenants. I've seen these where you can 5 times the rent on a property by converting it into an HMO. Single property, convert it, and you've now got multiple tenants all paying rent. Next one, the rent-to-rent strategy. So you're identifying a buy-to-let property. You don't need to buy it. You can take your rent, or you can lease it on the property and rent it out. Again, this is sort of, you know, you rented a property, you rent it again, but you're obviously renting it for more than you're paying and take a monthly profit. This kind of thing you see a lot where people have quite a large portfolio on this. You might not make much money on one. It's, you know, you might get one rent-to-rent property. You might only make a couple £100 a month profit. But if you can build a portfolio of those, then it becomes viable. Lease options, very similar. No need to buy, just taking a lease with a right to buy at a later date. Again, similar sort of strategy, lease option, rent it out and take a monthly profit. Commercial property investment. This can be offices, hotels, care homes, retail units, acquiring commercial properties, renting them out, and then you make the decision whether you hold it or sell it. Often longer leases with these than you see with residentials, which gives you obviously a bit more security. Joint ventures, again, one of my favorite terms. Do a joint venture with someone else. You've got a property investor on one side, property developer on one side and investor on the other, and they do a JV. Loads of benefits to this. You know, there's more potential deals. There's more access to capital, and you're covering both sides there. You might have one person who's got access to capital, another person but can't get the deals, another person with loads of deals that can't get the funding. A quick JV, combine expertise, expand. Both people are expanding the network, enhance credibility for them both, and obviously economies of scale. Property auctions are a great one. I've got a JV client right now who owns a property auction, and so I know quite a lot about this, and I've been to a lot of property auctions over the years. And the good thing here is, you've got numerous potential acquisitions. They're fast. You often can buy it below market value, potential for a bargain there. But you've got to know what to look for. You've got to know how the auction works, and also very important is have a strategy and stick to it. Don't get carried away, in the heat of the moment and overpay for a property that have you sort of know what you're going to willing to pay for a property and stick to it. It's fast, it's exciting, and there are bargains available. Number 13, off-plan investments. I was heavily involved in these when I had my company in Spain. You're selling properties that are 18 to 24 months pre-completion. As it says there, they're very popular in Spain and Dubai. And we sold literally thousands of these back when I had the company in Spain. The client pays a deposit. There's often capital appreciation pre-completion. So they've secured the asking price. Let's say they've secured buying an apartment for £200,000, but then when it comes to completion, those apartments are selling for $250,000. The ability to sell pre-completion was what a lot of our clients liked on that. That's that one. Property crowdfunding, we all know what crowdfunding is. It's got multiple uses. You're basically effectively owning a minority share within a property. But the downside to this is little or no control over the properties that you own. So it's multiple investors. You have a low share of an equity. It's lower risk, but again, lower control. Real estate investment trusts. These are, they're not new, but they're on trend right now. A lot of people talking about these. Similar to crowdfunding, it's an ability often to invest in a larger scale development, which you wouldn't be able to afford to invest in on your own. Here you're earning dividend income. It's obviously passive. You're not really involved in the development itself. It is, it's an experience, to be involved in a larger scale property development than you might be used to. So that's the property strategy section. So we talked there about 15 different ways you can make money from property and real estate. As it says, you don't need all 15 to become a multimillionaire. You just choose one or a few if you prefer. And it's still under 5 courses yet. And they're the 2 major ones, of course. Now, again, as it says, if you've had enough of me, if you've heard enough or whatever, or if you actually honestly think that buy, build and selling companies and property strategy, I have a lot of clients who are property developers who are now we're working through buying companies with, and effectively like maybe even on a roll-up basis with a few of them. So if that is the case, if you've seen enough, excuse me, you can now click on the link and book a strategy call, or stay on the training and watch the rest. It's up to you. Okay, course 3, simultaneous transactions. I said this is something I'm involved in right now with a few deals on a joint venture. So incredibly profitable, effectively buying and selling on the same day. You often have to find the 10% deposit to make this work, or you can negotiate an assignable option agreement, which negates the requirement for the 10% deposit. You must have the competent solicitors in this. You've got to have the right people advise you on the legal side of things. And my favorite sort of way of using these is change of use. So you effectively, which we're going to come on to in a moment. And then once you've got your strategy right and you've got everything in place, you just rinse and repeat. You just feed more deals into that. It's like a conveyor belt. So you're effectively buying and selling on the same day. Current deal I'm working on at the moment, there's a property for sale for 4.3 million. But the change of use here is that a different owner of that property, that property is for sale, but it's been valued at 4.3 million because it's been rented out on a effectively an Airbnb serviced accommodation basis. So it gets, I think, about 460 a year, which gives it the 4.3 million valuation. But a different owner would value that at 10 million, north of 10 million. So again, we're looking at the moment whether we can get an assignable option agreement on this, or we need to raise to 10%. Either way is great, because if you just need to find an investor for the 10%, you can offer an excellent ROI on this. The money's not out for very long, and there's enough money in the deal, of course, to pay them a huge ROI on that. Circa 5 million profit again on this one deal. Okay, course 4, joint ventures for business owners. I don't know how many times I've mentioned joint ventures so far in this training, but I love them. So we're going to talk now about how business owners can use joint ventures. So effectively, you're sourcing JV partners. We've got a similar product or service, fishing in the same pond, create a win-win deal with them, combine your resources. Do a marketing joint venture as well if that suits. And it's low or possibly zero cost to create this. You're looking for complementary products and services. You're looking for the companies with a similar target market, and it's profitable for both parties. Example JV deal in business. Let's say you've got a roofing company. It's something I've done in the past. A roofing company, electrical company, 2 different companies. They've got a similar target market, of course. They're fishing in the same ponds. They form a JV. It's profitable for both parties with low zero cost marketing. So effectively, the roofing company is marketing the electrical company services. They're telling their clients that they're now working very closely in a collaboration with an electrical company. Vice versa, the electrical company is doing the same thing with the roofing company. Both companies increase their turnover. Both companies increase their profits. And what's been the cost? Very, very little. Course 5, joint ventures in property. Again, very similar to using joint ventures in business. You're sourcing JV partners, and you got to think, actually, what are you missing? What are they missing? Create a win-win deal. So the obvious one here is a property developer on one side of the JV, an investor on the other side of the JV. The property developer's got deals. He can't raise the funds. The investor has access to the funds, but can't find the deals or doesn't have the potential deals. And again, rinse and repeats. That should say rinse and repeat. Didn't spot that. And again, it's profitable for both parties. Example JV deal on a property, as we've just mentioned, then so basic, but it's very simplistic, but it's so effective in the same way. Property developer who requires funding, an investor who requires deals. They form a JV, profitable for both parties, simple but effective. Not much more to say about that. Obviously, the structure and the strategy is something that you need to learn and obviously get right, but that's effectively a summary of it. Okay, course 6, artificial intelligence in business. As I mentioned earlier, AI is not going anywhere. It's just going to grow. It's transforming the whole economy, the whole worldwide business is being transformed by AI. Let's have a quick look at this. You know, the key things, the sort of key software and apps you can use. ChatGPT is obviously the major one. It's so fast. It's ridiculous how fast ChatGPT is and how effective it is. If you get the prompts right, you've got to know what prompt to put in. The whole term garbage in, garbage out. If you put the wrong thing into, or you don't quite put the right thing into ChatGPT, you're not going to get the desired result. So the prompts are key on that. There's Synthesia. I love Synthesia. It's great. Answer the Public is another one that you need to look into, and there's so many more. You know, if you just Google AI for business, you'll see so many different pieces of software and have a look at them, see what's suitable for you. Now, what I say about AI, it's not doing 100% of the work, nowhere near. I think it's doing about 80% of the work, okay? But there's still huge time savings, and you're looking at months versus hours. You know, creating a piece of work that could take months if you do it all yourself and you're creating it from scratch. But if you're using AI to do that, it can take hours, literally. So it's an AI revolution, absolutely. And then what we're seeing now is 100 years advance in a few years. So if you look at how technology has advanced over the last 100 years, we're effectively seeing that again in the space of a few years. So again, make sure you don't get left behind. So the utilization here, there's so many ways you can utilize AI in business. You can look at your financial and legal side of the business, customer engagement, marketing, sales, operations. You need to sort of look at your excuse me, you look at your particular business and what you're trying to achieve, what your objectives are and how you're growing your business, etc. And then say, okay, what could I use AI for? How can I save myself time and do this, you know, in hours, rather than months? Course 7, AI for property, very, very similar to what we just talked about. But this time, the course that they've created here is all about how to use AI for property. So again, we're looking at ChatGPT, majorly important. We're looking at software like Zillow and Redfin and House Canary, great AI software. Again, 80% time done for you, huge time savings and months versus hours. So I'm just repeating the same thing there, of course, but AI is AI, you know, whether you're using it in business, using it in property. There's so many ways you can do this, and again, it's all about what do you need it for? What property developments are you doing? What property investments are you making, etc. And how can you use AI? And it's just all about researching and working out the best ways to take advantage of this AI revolution. So a quick AI property utilization, you can use it in market analysis. You're looking at analyzing the property market in your specific area. Look at investment decisions, due diligence on investment decisions. AI can save you hours upon hours. Project management, there's software that can help you with the project management and massively speed that up. Construction efficiency, you can make your developments and particularly your ground up developments a lot more efficient by using AI. And of course, deal promotion. Once you've done a property development, you want to promote that development and sell it or raise investment maybe. So AI can help with that. So quick recap of the 7 courses and the 7 parts of this training we've just talked about. The major ones, of course, were to buy, build and sell a company, how to buy, build and sell a company without using your own money. That was a major part of this training. Property strategies, the 15 different strategies there. As I say, you don't have to use them all. My favorite property strategy, which I'm using myself at the moment, simultaneous transactions. JVs for business owners, JVs for property, AI for business owners, and AI for property. So I looked at this and so, what do people need to learn to effectively create this multi-millionaire lifestyle? And I think it's covered there. If you were to learn all these strategies, you've effectively covered all the bases. Again, let's go back to something we talked about very early on in this training. What does a multi-millionaire status give you? It gives you the personal freedom, the financial freedom, doing whatever you want with whoever you want, whenever you want, and the ability to buy whatever you want, of course. But it's different for everyone. So again, just take a moment now to think about what this would mean to your life if you learn all these strategies and you apply them correctly. Again, you watched the client testimonial video before. Just there's a bit more there on a few other ones there, a few other people saying nice things about me, which is always nice. And effectively, let's get your strategy call booked in. So if anything I've said during this training has piqued your interest or has made you think, this is something I'm sure Paul can help me on this, book a free strategy call. Again, it costs you nothing. There's no obligation, but let's click on the link and get you where you want to be. And I'm going to close this training now and just say, I really hope this is the start. I hope this isn't sort of, you just watch this free training and I'm sure you got a lot of value from this, a lot of interest. And I really hope you did. But let's not make this the end. Let's make this a start of a relationship. As I say, I'm doing joint ventures right now with a lot of my clients. I'm helping a lot of people right now, and I've learned so much over the last 20 years. And I can teach you with these strategies. I can also make sure you don't hit the problems and the mistakes I made. So it's, again, what have you got to lose by booking a strategy call? So click on the link below. That'll take you to the landing page, and you can book the call. And I really do hope you do that. And I'd love to see you soon.